I guess let's explore the dividend part of it for a little bit. So let's talk about the yield that they pay and maybe why people invest in REITs as opposed to buying a bank stock, for example. What are the advantages dividend wise that you would get from a REIT versus those other ideas?
Yeah, kind of like you said, they have to pay more of their earnings in dividends. And so investors like that because you're getting a higher yield.
Mhm.
I mean, I know one of the REITs in my portfolio, I see the dividend in there and I'm like, whoa, did
Yeah.
I get a bonus? What's going on here?
Right.
Like it's much higher than other companies would pay out. But
Right.
it doesn't come for free because
Mhm.
if I'm a regular company and I want to grow, I gotta take those profits instead of paying it as a dividend, I gotta reinvest in the business.
Right.
So with a REIT, it's the same way. They have to generate money to grow. So instead of doing that from their profits, they will do it from the shares. They will dilute the shares. So remember, I don't know if people remember we talked about the pizza. If you have a slice, if you have one share of a stock, it's like a slice of a pizza. And if a company buys back shares, your slice gets bigger and bigger because you're owning more and more of the company. With a REIT, they do the opposite. So your slice actually becomes smaller, and that's how they generate the cash that they need to buy the real estate. They'll also take out debt. So you'll see a lot more debt with REITs too. But that's what they'll do. And so it's a different, a lot of times they will grow faster than they make your slice smaller. So you'll
Mhm.
still see growth. But that's one of the things that it's not too good to be true. You're just paying for it in a different way. That might be harder to conceptualize because it's not as simple as we make a profit and then we invest it and we grow. It's taken out, you're paying for it in a different way.
Right. Yeah, I agree. And I think so. A couple things about the dividends to also consider about with REITs is number one, the yield is going to be based on the fixed dividend they're paying compared to the price of the stock. And so as the stock market moves, that price is going to fluctuate. And so both of these companies, the stock prices dropped recently. And so that is driving up the yield of these companies. I think this is just a generality. So this is not all encompassing, but generally when you're looking at yields on REITs, and that for those of you who aren't familiar with this term, that basically is the comparison of what the dollar amount that they're paying for the REIT compared to the price in the stock market. And so what you're seeing is if that goes up, it means the stock price is probably dropped because they don't change the amount of money they give you on a dividend that quickly. So there will be fluctuation. But generally for good quality REITs, you want to see probably as just a spitball, 3.5 to 5.5% range for a dividend yield. And if it starts going up or down based on that, then you want to do some investigation. And so if you see a 10% yield on a REIT, that may be great, but it also could just be because the stock price has dropped a little bit. And that in and of itself may not be anything to be concerned about. Again, it goes back to the underlying fundamentals of the company. And so like any other company, a REIT is something that you have to look at the financials and analyze and try to determine what the economic outcome will be based on how the company is performing. And so just like Microsoft or Visa, you have to look at Annaly Capital and decide whether their financials are going in the direction you want to see them go. And so going along with that, then thinking about the return that you get from investing in a REIT is a little different than you would get from investing in a company like Wells Fargo, for example. And a lot of the return that you may get from a company like Wells Fargo or even Microsoft is from the share appreciation. Whereas with a REIT, sometimes more of your return is going to be based on the dividend that they pay you because the stock price may not move as much. And so you're not going to see a 50% return on a REIT where it's not unusual to see a company like Google go up 50% in a year, but to see a REIT go up 50% in a year is probably more unlikely. And so the return that you're going to get from investing in a company like a REIT is going to be more from the dividend over the long term than it will be the share appreciation. And again, that's just a generality, and that's not something that you're going to see individual companies obviously do very well in different cycles. And so those are things that you have to consider. Data REITs, for example, right now are the hot thing because data centers are huge, and they're, companies like Microsoft and Amazon and Google are in a race to see who can be the biggest cloud provider. And so they're building massive amounts of data storage, and REITs, there are companies that manage those for Microsoft, Amazon, and Google. And so there's a huge race for that. So those are hot stocks right now. But whereas something like healthcare, maybe not so much. So it'll go in cycles. But to get back to my previous point from my long-winded answer here, is that the basic idea is you need to understand the business, like Andrew was saying. And that's key to just investing in general. And REITs are like banks in that they are a different kind of language to understand. And we have written a lot about REITs on our website. And so if you're unfamiliar with a lot of this language, or if you're like, yeah, I really want to get into this, but I don't really know where to start, go to einvestingforbeginners.com and type in REITs. We have a search bar, type in REITs, and you're going to find lots of great articles about the structure of REITs, how they work, how to analyze them, how to value them, lots of great stuff, how the dividends work. There's lots of great stuff out there. And there's lots of great people on the internet as well that are very, very well versed. Brad Thomas is probably, I guess, the acknowledged master of REITs, if you will. And he's written some great books about REITs as well. And so there's lots of great resources if this is something you really, really want to kind of dive into.